Hey, this is Danielle, and today I'm going to be talking about Netflix earnings. Netflix earnings is going to be one of the most important events of this week, and it's coming up very soon. We are going to see the report from this company on the 17th after market. So get ready because when you look at this chart, you can see that there's probably some pretty decent anticipation because we've seen Netflix gap higher the last 3 quarters in a row. Now, what's even more important is that last time, not only did it gap higher, but it continued trading higher for about 2.5 weeks. The time before that, major gap here, and it traded higher for almost the rest of the quarter until it eventually pulled back before earnings, then gapped up again. Quarter before that, well, you can see that it gapped up, but it didn't hold. So that one's not as bullish. But at least the last two reports did really well, reacted really well. And so typically when that happens, you have a bullish anticipation coming into this report. So are they going to be able to have a strong enough report that people are going to come out and they're going to say, wow, things are great. Tariffs aren't impacting you. The market's kind of a mess, but we still like Netflix. What would that look like? Well, the market maker expected move in the stock is $44.27. So that would take you down into this range at 887 or up here just below 1,000, take you to about 981. And what if we blew outside of those ranges? Well, at that point, that's where you have to say, okay, there's a 44-point expected move. What would be a double? That would be almost 90 points to the upside. What if we got almost 90 points to the downside? Where would that take us? So you also have to be aware of, what would be a quote unquote normal move and then what would be a greater than expected move in either direction. Now, with this stock, we just demonstrated that it has had greater than expected moves the last 2 quarters at least. And then if we scroll back even farther, you're going to see that there are quite a lot of big moves in this stock, both to the upside and to the downside. So the moral of the story here is that whether it trades up or down, I do expect it to be a big mover, and more than anything, I also expect it to impact the direction of the market. Because the market is quite fragile right now, if we end up seeing Netflix trade down into the expected move and then below, that's a situation where I would look at the rest of big tech and I would say, okay, how can we possibly have any kind of bullish anticipation going into earnings and the rest of these tickers if Netflix comes out and rocks the market, right? So that's something that you really need to look for when it comes to Netflix earnings because you can generally ride that wave. So, if Netflix has a terrible report, you can usually come into any of these other tickers that have earnings upcoming as well and say, oh man, Netflix didn't do very well. The market's afraid. Let's follow this momentum to the downside. But the same thing works to the upside too. If they have a great report, we might see some upside movement in the stock. So, beyond just using this ticker as a barometer to trade direction in the other names, what could you do for it with earnings? Well, for me personally, I like to use butterflies. You can either place your butterflies at the expected move or above, again, at the expected move or below. Sometimes I'll do it both ways. In this case, I feel like it's kind of a toss-up, to be honest, because even though they've done so well in the past, things are pretty shaky right now. So I wouldn't be surprised if even if they beat their EPS estimate, they still traded lower just because of the way that the market is. I think that's pretty common in this kind of environment. So I wouldn't mind having a, low price butterfly here and here just to see which one hits. But you also want to look at the options chain just to see, is there anything that's standing out? You also want to look at your squeezes, and this is why I think that this thing could have a lot of big movement because we have squeezes across all time frames. 30-minute squeeze, 195-minute squeeze, daily squeeze. And when you have that consolidation building up going into the earnings report, that's when it will generally break out on that report. So looking at the options chain here just to see, if there's anything standing out to me, I can definitely see quite a bit of high open interest at the 1,000 strike price. So, I wouldn't mind having a kind of like a lotto butterfly up at 1,000. I think, in the instance that it did explode to the upside, I think that's a really good price target. And then to the downside, let's just see what is standing out here. Looks like we have a little bit of a slant because there are not as many big strikes on the put side that are standing out. But you do have 850. So 850 would be pretty close within the expected move. So if I was going to do butterfly, I could definitely do an 850 butterfly in this name. And then as far as how wide to make it, it really just depends the day of the earnings report and how much money you're willing to spend on it. So for example, you just start with 850 as the center strike and you can just widen it out. Let's just start with $20. This butterfly is only $1.33 per contract. So just widen it out a little bit more. Just see how much you're willing to pay. Generally you want the net to be as wide as you are comfortable paying for, because the wider the net, the more likelihood that the stock will fall into that zone. So for this example, $30 wide, it has a 63 point expected move. So it is likely to move that much. Less than $3. It's a pretty good, lotto trade to the downside. Then you could do the same thing to the upside where you say, okay, is there a strike that's sticking out? Definitely 1,000. If you wanted to make it more likely that it would hit, certainly you could choose a lower strike like 980. But let's just look at this and see. Honestly, because there are so many calls outstanding, it almost makes me a little bit more bearish, just because I feel like if a lot of people are expecting this to do so well, they might be disappointed. The upside fly at 1,000 is going for 375, so not bad, a little bit more than what I like to spend on an earnings trade. But this is my idea, a couple different ideas, and I'll be trading them in the trading room. So if you want to see the final trades I end up putting on, make sure you join us in the trading room. But right now it's still a few days before earnings, so I can't say the exact strikes because it's going to depend on where the stock is trading right before the report. So hope you have a great day, and I'll see you in the next video.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe, and also give us a like and comment down below. If you want to learn more about us and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com where you can join us for more info. Thank you very much and have a great day.